All right. What's good, everybody? Welcome back to another webinar. Didn't have any webinars last week, just simply because of the bootcamp. Today's webinar is not going to be too long, but what I do want you guys to take into consideration that we are almost in the Christmas time. So realistically, like if I was in a position where I was still actively trading in the month of December, I'd probably trade all throughout this week, but next week and the week after, I would completely take off, just simply because there's not going to be a lot of volume in the market. Now, just because there may not be as much volume in the market does not mean that there will be no volume in the market. You may see some moves, you may be tempted to see or to potentially take some positions. Me personally, from my overall experience, it's always best to trade after the holiday period. So my advice to you guys is I wouldn't trade next week or the week after until January. You could trade throughout all this week. You should be fine. Not really get caught in any chop and or consolidation. But just my advice to you guys. Now, starting off with gold. So what I'm going to be looking at here on gold is the major levels that we have here on gold. So if we pay attention to how the weekly time frame has been forming overall, we have a high, we have a low here, we have a higher high, a higher low, then a higher high. So structure is clearly bullish here on gold. One thing to keep in mind is that gold did pull back to this previous area of structure. We are now starting to see some selling pressure in this area. So we could potentially see gold go bearish. If we do see gold go bearish, a pretty safe area we can expect gold to come back down to would be this 1760 level, where we have this major area of support, where initially we had a rejection of the 1760 level, then price break back up. So we could see another retest of this area, and this could create pretty good buying opportunity to buy back up into the 1800 range. Now, breaking it down to a daily time frame, structure is still clearly very bullish. We have higher highs and higher lows, but price did just form this double top pattern here at this major area of resistance. So realistically, right now, what I would be looking for is for gold to continue to go down into this area here. And if price breaks under this previous support range, we can definitely expect gold to come back down into the 1760 area. Now, if gold breaks above 1800, we can wait for a retest for price to then buy it up into this 1831 area. And then all that can be done on the lower time frames. So if you are going to be looking to potentially sell gold, this is not an area where I would actually look to sell gold right now. I would like to see gold actually pull back into this 1804 range. And if price can reject this 1804 range, you could easily look to sell it back down into the 1785 previous support range. Anything above this 1808 area, I'd wait for a retest and then look to buy, because you don't want to get caught in a possible fake out. So that's what I would do in that situation there. Now let's go over GJ. I haven't looked at GJ. So GJ, let's go to the weekly time frame. So GJ on the weekly time frame, again, this is regular choppiness that we see here. Price is still consolidating inside of this resistance range that we have here. Call it 168, 192 being the highs of the range, and price is pulled back into the range. One thing that is interesting to look at on GJ and to keep in mind is that price is slowly starting to trade higher and higher. If we look at each week's previous lows, except for this one here, we're starting to see price kind of right above this 21 moving average, which is kind of concerning if you're going to be looking to actually sell. And what we have here is an area of support that did reject on the previous week, and then price went bullish from there. So the weekly time frame is kind of looking bullish, but as long as price can maintain under resistance, we can continue to actually look to sell. On the daily time frame, there is a lot of exhaustion towards the upside here, which is another sign that we can still continue to actually look to sell, especially if price maintains under the structure zone here. Once we see price start to break above the previous daily highs and start to break above this structure point, then we can start looking to buy GJ again up into the 169,500 or the 171. That would be a pretty good area for GJ to actually do so. Now, I wouldn't look to sell GJ as of right now, but definitely I would like to see more data coming into the London session. If GJ can obviously maintain under this kind of resistance range that it formed up here, then you can look to actually still go short. Anything above this resistance range, I will look for price to hold the support as it did throughout this area here, and then look to actually buy it up into the highs being over here. Now, if price starts to actually break this area, I'd actually want to see price pull back into this area and hold as resistance, because if it holds as resistance, then obviously it's a pretty good indication to actually look to go short and sell it down into this 165,500 range. Again, anything above like this 168 area, you can look to buy it up into this 169 range. Call it 168,800 to be safe. Anything under this 167,300 range, you can look to sell it down to this 165,500 range. As we saw what happened over here, here. This is kind of like the same exact setup that I would look for just over here in this area there. That's with GJ. Now with the NASDAQ, let's go to the weekly time frame. So if we look at the NASDAQ on the weekly time frame, overall, this looks like a still very strong bearish market. Price is rejecting the 21 SMA, which typically when price is under the 21 SMA, I would like to be more sell biased than I am long biased. Also notice the pullback to the 21 SMA and price rejecting the 21 SMA. We have a nice clean bearish engulfing candlestick, although not being the strongest engulfing candlestick, it is an engulfing candlestick, and we can expect this bearish trend to actually continue. Now, for me to want to see this bearish trend actually continue, obviously I would like to see a break under this support range. If price can successfully break under the support range being 11,500, let's call it, then we can easily see price come back down into its previous support ranges where we have 11,000 flat, and then we potentially have 10,000, call it 650, which is this area over here. But first things first, this support range needs to break for us to continue to see the NASDAQ drop. Now, obviously, the way you could take advantage of a potential break of this support range is obviously a break, a retest, and then look for price to continue to go down, which it would be a lot cleaner because we're starting to see price break that area of support on the daily time frame. Now, one thing to keep in mind is that obviously this is previous support, but look at how every time price reacted off of this support level before, we had an immediate move back up into resistance, which that's starting to not be the case here, which is also showing us a sign that sellers are stepping in. So initially with this rejection that we had here, we had a pretty good buy signal here on the NASDAQ, but then very quickly we saw sellers bring price all the way back down. Now buyers can step back in again at this entire range that it has over here, and it could go from support all the way back up into resistance. But at this point in time, we're starting to see more sell signals than we are starting to see buy signals. And now, especially that price is broken back under this 21 SMA, pulled back literally into the SMA and is now starting to reject, is another sign that we could potentially continue to go down. So things are starting to look bearish for the NASDAQ again. Again, the only thing I'd want to see for me to actually be able to take a sell position is a break of the support, a retest, and then for price to continue to go down from there. The S&P 500, we have a nice bearish engulfing candlestick on the weekly time frame where price did close under the lows of the previous week. So if we look at the weekly candlestick and we analyze these weekly candlesticks, essentially what we have here is week after week after week, prices made higher low after higher low after higher low. And now we're starting to have a transition where price just made a lower low. We look at the highs of the week as well. We have higher high, higher high, high, higher high, which all the previous weeks is a very strong bullish indication. But last week, price made a lower high and now a lower low, which is, again, is an indication of bears. It's an indication that price can continue to actually go down. This is based off the weekly time frame. If we look at the overall flow of the market as well, we can see another leg to the downside. The potential is definitely there. I wouldn't go as far as to try and assume that that will happen, but I'm going to let price tell me that that may potentially happen. For me to actually see price continue to go bearish, if we look at the daily time frame, we have a median of support here. This is going to be a 4-hour support level that I actually marked off that price is now currently trading under. So from an intraday perspective, what we can actually look for an intraday move is for price to pull back into this previous 4-hour support range and actually look to take a sell position along this entire area to sell it back down into 39.12, which would be a pretty good trading setup. Anything above 39.12, then we can probably expect price to come back into this 39.54 range. Again, with the new weekly candlestick opening up, there is going to be a weekly high before a weekly low, or vice versa, but the entire structure is the same. Price is going to pull back at some point, make a weekly high, lower high, and then continue to go down, make a weekly low or lower low. So we can anticipate a pullback, especially in the beginning of the week. But an area where I would like to go short would be a retest of this area for then price to go down into 39.12, or a complete break of this 39.12 range, which is going to be a daily resistance range, as we've seen in the past over here and here as well. I would like to see a break of this range for price to pull back, retest, and then continue to go down after that. So basically what I would look for is kind of like a move like this here. That's going to be for the NASDAQ. Now for US 30, go to the weekly time frame. So US 30 is a little bit choppier for me in terms of like price action on US 30 compared to like the NASDAQ or the S&P 500. But just going over basic price action and looking at these candlesticks and just analyzing these candlesticks, although price did actually break higher than our initial kind of lower high point that we saw here, where we saw a huge move, a huge bearish trend in the market, we did have price close back under this resistance range that we have here, being this weekly level. Not just that, again, let's look at the highs and the lows of the previous weeks. We've seen price form pretty much low, higher low, and then a low as well. Then we have a high, higher high, and then a higher high. And now if we look at the previous week, we have a lower high, lower low. So it looks like the market could potentially transition and either pull back to continue to go bearish or actually go and give us some form of a bearish trend. Again, I don't like to make that assumption. I like to let price tell me what it's going to do, but looking just for short-term price action, this was a pretty bearish week, and we can probably continue to expect price to actually go bearish. Now, if we look at the closes on the daily time frame here, price has actually closed under all of these daily closes, which is a pretty good sign that price may continue to actually trade lower. Now, I wouldn't like to say that price could just potentially go all the way down. Price could definitely give us a pullback back to these closes here, being 33,538. Now, there's not a lot of detail or information that I would like to make an assumption on where price could potentially travel to. But what we do have is initially, this is an important resistance range throughout this entire structure zone here. As you could see, price held as resistance multiple times and held as support multiple times, broke under and continued to hold as resistance, which is a clear as day setup that we talked about in the boot camp. And this is kind of like a lot of choppiness here. Look at all the wicks to the upside, look at all the wicks to the downside. If you trade a 5-minute time frame, this could be very confusing price action. But as long as you kind of maintain yourself on the 4-hour and the daily time frame, and you understand where the 4-hour and the daily time frame are going to go, then I would continue to look at the lower time frames with a 4-hour and daily time frame bias, just so you don't have any confusion on where the market may potentially go. Let's look at the 4-hour here. So the 4-hour actually broke under this area of support here. There's been a lot of lows tested around this range here, but if we look at the overall support range, it's going to be roughly around this area right here, which is going to be, let's drag this out to the future, which is going to be 33,537, which is going to be our support range. So we have two support ranges we could potentially look at. We have this 33,324 range, and we have this 33,560 range, let's call it. So as long as price maintains under this 33,560 range, we could actually look to sell it back down into this 33,324 support range, or into its previous support range or current kind of range of support throughout this area here, which this would be our current low. And that's where we could potentially look to take a position from. So, this would be the area I would like to go short. I mean, if you want to be like a little bit more in the range, this would kind of be an entire range. We could look for price to maintain under to actually sell. Obviously, if price breaks above this range here, then we could look for price to come back up into our major weekly time frame or daily, weekly and daily support range, where we could then obviously sell it back down if it rejects, or buy it back up if it continues to break. But honestly, the way price is forming on the weekly and the daily time frame, we can easily expect price to go down into this weekly and daily resistance level. Obviously, if price breaks under, we look for price to go back down or to go back up, retest it, and continue to actually go short, which is something that happened over here. Notice the break, notice the retest, and then notice price continue to go short from there. Not just that, it had a huge change in trend after it broke under this major area. So this major area is an area that we're going to have to pay a lot of attention to, because it is going to dictate a lot of things, like where the price could potentially go. Not just that, how far and if the trend could potentially change if price does break under that area. So I feel like there's definitely going to be a lot of indecision in this area. It can happen. But that is going to basically summarize the breakdown. I'm going to answer a few questions, so let me know what questions you guys may have, as this webinar isn't going to be.
Hey, Ro, what's your thoughts on gold? I'm a little late. Sorry about that.
Basically, we can look for gold to actually continue to go short from this 1804 range back down to 1779 and then 1760. Anything, if price were to come to 1760, you could potentially look to buy it back up from there. But as of right now, price is giving us bearish signals that we could go back down to the 1760 range. So I would look for a retest of 1804 to sell it back down. If price breaks above 1804, I would look for a retest to then buy it up into 1830.
Yo, Raul, could you go over?
Thanks, bro.
Raul, could you break down silver?
Yeah. So silver is obviously very different than gold. So the thing about silver is price is currently at a higher high point. So silver could potentially pull back based off the weekly time frame. If we look at the weekly though, silver broke above its major area here of support, which is the daily 22 support range, came down, retested, and completely rejected and made new highs on the weekly time frame. So basing this kind of just solely off the daily time frame, obviously there's previous resistance in this range here. So, I mean, you could look to buy it at this previous resistance range, but honestly, I think silver is going to give us some form of a steeper pullback back down into this daily 22 area to give us a better retest. And then we are going to have to see what price actually does. So let's go down to a 4-hour time frame. On a 4-hour time frame, I mean, price is already rejecting this entire resistance range. So as long as price can actually maintain under this resistance range, you can continue to look to sell it. Once price breaks above, then I would actually continue to actually buy it, especially if price were to get under this 23 level here. You could look to sell it back down to this 22 area. Obviously, anything above this area here would be buys. Anything under, we can actually look to sell it back down. But silver looks pretty strong from a bullish perspective. The only thing that I would like to see again is another retest of this area down here, because typically like we'll see multiple retests of major areas before price goes up, because this is where we're going to see like where the bigger liquidity actually is. Like if we just look at the actual past before, look at how many times price actually retested this area before continuing to go bullish. Now a long-term target, if price does reject this 22 area, would be 24.8, which is a pretty good long-term target there. Obviously, if gold goes up, silver will go up as well. Since gold is looking kind of bearish, then silver could potentially pull back to this area here. But I would definitely look for buys along this area here. Anything in between would be a little bit uncomfortable for me to actually take a position. I would kind of want to see more data on what price actually does. Yep. Any more questions?
Yeah, Raul, I got a quick question about your entries.
Sure.
So do you still wait for the break on the hour and the 30, and then you wait for the retest on the 5 and with the aggressive entry? Do you still do that?
Not necessarily. I don't think I've done that in a very long time. I like to trade like a 5-15 minute time frame based off of all of these intraday levels. I don't wait for like a strong close under on the hour. If I see on the 15-minute time frame that price breaks under a level, then I'll kind of take an entry there if I want to trade a breakout, or if I want to wait for a retest, I'll just wait on the 15-minute time frame for price to come back down, retest, and then look to buy it at that certain level.
Gotcha. Appreciate it, bro.
Yeah.
Oh, also one more question. How often would you say you trade between your major levels? Like, would you just wait for it to hit the daily or the weekly or the 4-hour levels?
Basically, like I look at my intraday levels, and that's kind of where I'll take positions from. I wouldn't say like I trade the major levels all the times. To give you like an example where I would have potentially taken trades at these intraday levels, probably would have been throughout this entire range here, this entire range up here. Those are my more major levels, but I've also would have taken trades in this range here. So, you know, whenever price gives me the opportunity, I'll take it. You know, but it's not like I only wait for the major areas. I just take bigger positions on the major areas because they're the highest probability setups.
Gotcha. Appreciate it, bro.
Yeah.
Go to GJ real quick, bro. So you see where 165 is, and you got these levels just above. Your cursor was right at the level just above it. It's not marked off, but there's like a support level right above there in the middle, between the red and the black line, like right around there. Yeah. So you say you're going to wait for price to come down to 65. why wouldn't you? Oh, you would aim targets like when you see the retest of 167, 300, you would wait till the price comes down to 165. Why wouldn't you would you put your first target right where your cursor is right now and then look to hit 165, or would you just aim for 165?
Yeah, for sure. I mean, just like we discussed in the boot camp, like just because like I have a long-term projection of this is where price is going to go doesn't mean I'm going to take profit off here. You know, if I get good risk reward opportunity, I'm most likely going to take my entire position off there. But then I still know that this is my long-term projection.
Got you. Long-term meaning within the same day, right?
No, long-term meaning within the next few days, we can easily see price come here.
Oh yeah, it's H4. I understand.
Yeah. Yeah, but I wouldn't take a trade from here all the way down to here because I'm not swing trading. I mean, if I were to take a position from there, then I'm going to be looking to take a position from probably 167 all the way down to the nearest support level, which is going to be 160, call it to be safe, 166, 550, because price may not break that support level, and from there it'll go up. But my initial projection of price going bearish was accurate, and I'd want to capitalize on that accuracy, you know?
Yeah.
When you hold positions for longer and you start looking to catch bigger moves, you're open to more risk.
Okay, bet.
Yo, Raul, do you know if price is trading at your major levels and it's not like your session, it's not your session time, would you still enter or you wait for your session?
I wait for my session.
Because like, you know, if you go into silver there and on 6th December, I think it was 6th December, yeah.
I'm gonna
I
do
got
it.
an entry confirmation from the 1 hour variation.
What date did you say?
6th December.
6th of December? Here.
Yeah, there. That 1 hour variation. But I didn't enter because I wasn't sure if I'm supposed to enter because it's not my session time. So I just missed it then.
This is session though. This is New York session.
Oh, I trade London, so
I mean, there's still going to be volume in New York. The point is to try and avoid trading Asian session because you're going to have the most volume and liquidity in the market during the London and New York session because that's when the major banks are open. That's when basically everything is the most liquid.
Oh, okay.
It's
So
trading
what time is the latest you're gonna look for again?
Bro, and honestly, the latest I would look for a position would be like, it depends because I'm not like taking long-term positions. If I was taking long-term positions, then I wouldn't mind taking a session late because I know that, hey, maybe it won't move this session, but I could get a pretty good entry here and it'll play out during the London or the New York session. You know, if I was trading just solely how I'm trading right now, the latest I would take a trade would be 2-3 p.m. But if I'm trading again like an hour time frame only, like my lowest time frame is a 30-minute time frame, I don't mind taking a position at 3:30. I'll probably cut it off at 4 if I don't see an entry by then. But I mean, like, this is like right, I don't want to say right in the middle, but this is only like, what is this, like 2 o'clock, 3 o'clock? And you could have taken that position here with your stops under here. And I mean, it ultimately would have depended where your targets would have been. Let's say your targets would have been here, would have played out during the next section because it's the New York session. But again, you have to identify the risks that you're taking by not taking a trade or by holding a trade through the Asian session. You're going to have to eat those swap fees and an inflated spread. And if the broker you're trading on is a straight scam, you're going to get stopped out anyway. So like, God bless. Right. But, you know, there's risks that are involved. You just have to analyze the risks because, I mean, just because I do certain things in the markets, I can only guide you on how I do things and how you should do things. But at the same time, like, you're the one trading, you're the one making your own money. So my best advice to you is before you do anything in the market, look at the risks, look at the pros, look at the cons, and analyze if that risk is worth taking.
All right, got you. Thanks.
Yeah.
Raul, what's your general thought process behind trading news, high impact news?
To be honest, the only news releases I'll ever really trade is CPI because I'm a lot more comfortable with the idea of trading CPI. Any other news event, I tend not to actually trade.
As in, you don't trade that entire day?
As in, I won't trade, like, example, if it were to come to CPI, right? I won't trade at all until the CPI news release actually happens, or the CPI report actually comes out. Because typically it's not too difficult to understand if the CPI report is going to impact the market negatively or positively. So I'll trade that news release. And I mean, if the trade wins, then great. I'm moving on with my day. If the trade loses, then, well, that sucks. I'll move on to the next day.
So
Anytime after that, I wouldn't trade it because I'm trading the news release. Now, if it's NFP, I just won't trade the entire day, just regardless. It's not worth it. Market conditions typically aren't the same on that specific day. Typically, like when it comes to news releases and days where there's high impact news, I just won't trade because I find it's not worth me putting money at risk. Sure, I mean, I could win a trade after a news release, you know what I mean? The market's kind of calmed down, but the market conditions just simply aren't the same. So to me, it's not worth taking the risk. I'd rather move on to the next day. There's always going to be another trading day. There's always going to be an extra 360, or not, I don't want to say 365 trading days, but
right.
it's not going to be the only trading day.
Because on GJ at 2 a.m. there's some high impact news hitting that is not CPI. It's something else for the entire economy. So you wouldn't trade, if you're a London trader, you wouldn't trade London, but you would trade New York, or you just wouldn't trade that entire.
Yeah, because I'm thinking New York. If you're trading London and there's a news release to happen in New York, bro, you could trade it no problem.
Okay.
Depending on the news release, you could see consolidation because, again, when you have a big news release such as CPI, there's a lot of anticipation. There's a lot of waiting. There's a lot of uncertainty in the market, which is where you're going to see this chop.
Yeah.
If you're one of those guys that gets caught in the chop, I mean, God bless.
No, I don't trade London. So I was thinking to like avoid that like session and just do
you should be fine to
my
be
regular
honest.
sessions.
If you're going to trade New York and there's a news release in the London session, you should be fine.
Okay. So what if there's news that hits at the start of a session? Do you not trade the entire session, or you just like trade like a couple hours after, or you just wouldn't trade at all?
I just wouldn't trade at all. I'll look at the market, but I wouldn't trade at all. Like when I see like news releases and it starts in the beginning of the session, or the news releases at like 2 p.m.
Yeah.
And not to trade simply because like there's been so many times where I don't want to say I know, but I had a great probability of winning the trade, but because there's high impact news that day, it just doesn't play out in my favor. But then the day after, it plays out in my favor,
Yeah, got you. I appreciate you, bro.
Yo, my fault. Raul?
Bro.
What's up? I was looking at SPX real quick, right? And I had a specific question, like on the daily time frame for SPX, like I was still looking like at it for it being bullish because I didn't consider like it broken into a downtrend yet. So I was asking like do you consider like on a daily time frame like SPX broke down into a downtrend or not?
I mean, you're not going to really see a downtrend until you have already identified the trend, or the trend is already actually happening. But if you just look at price action and you go with what price action signals are telling you, this is a pretty good transition. It's starting to look like price is starting to transition into some form of a bearish trend. Just look at the highs, right? Prices made pretty decent highs and then higher highs. If we look at the lows, I mean, prices maintained lows until here. Prices came and broken under these lows, made new lows, now made a lower high, and now price looks like it's going to make another low,
Yeah, cause what I did, I considered like that whole push up to be like a whole like a push.
Yeah, but you also got to think about it from this perspective. You got to think about it from a tug of war perspective. I mean, look at this bullish day, right?
Yeah.
Telling me buyers brought price all the way from 39.40 all the way up into the 44,000 range, right? And then day after day after day after day after day, price started going bearish, making lower lows and lower highs, and continue to make lower lows and lower highs. And it completely wiped out all of the work that the buyers did over here. So I'll tell you about the sellers. And not just that, it made price went lower than that. So what does that tell you about the sellers versus the buyers? You think if the buyers were that strong, they would let the sellers push price all the way back down to potentially even newer lows?
No.
It raises a big question for me. We could see price go bullish to some point, but then I feel like we could definitely see price continue to actually go bearish just because that's the way the market moves. Just kind of like what happened over here. We saw a big move down, a big move up, big move down, and then, price started to go up again after that.
Yeah.
Over here, sure, but then I feel like price is just going to continue to go down. Again, it's just as long as these structure points are valid and we identify what our lower highs are and we identify the different shifts in the market. Obviously, if price breaks this high here, I'm not going to be interested in selling. But since price is maintaining under this area, I mean, as long as price maintains under this entire kind of like structure zone here, then I'll continue to look to sell.
Okay.
Yeah, and I mean, you could just look at how structure is forming here on the 4-hour time frame. I mean, it's one massive candlestick, then a low, then a lower high, then a lower low, then a lower high. Now price starting to form a low. So this structure is starting to look bearish to me.
Yeah. All right, but
Yeah.
Hey, Raul.
Yeah.
Hey, man. I have a question. It might sound stupid, but just to have a clear view towards it. When you say fundamentals, what are the fundamentals? Just to have it clear.
What do you mean? Where are the fundamentals?
No, what are the what are the fundamentals of like when you say the fundamentals, you have to know the fundamentals of the trading or something like that?
What? I'm confused. I don't even think we covered fundamentals today.
Bro, he don't understand it. You talk about news events when you refer to the fundamentals. He mean
Or
like that.
he could probably mean the fundamental of like technical analysis, like the fundamental stuff.
Yeah.
So are we talking about
That's clear.
fundamentals and
Yeah.
economy, or are you talking about technical analysis? Because those are two different things.
Yeah.
No, the technical analysis.
Yeah.
All right, what about technical analysis?
When like shit, I don't know how to explain it.
Yeah, so like how you explain
Are you
like
talking
basic
about the
market structure,
foundation?
that kind of stuff?
Are you confusing the
Yeah.
word fundamentals for foundation?
Yeah, kind of.
I mean, what about technical analysis are you concerned about?
Damn. Honestly, I don't know how to explain that.
I guess he's trying to say, like, when you talk about fundamental about news, if we need to know about news if it's a news comment, something like that, I guess.
So
Actually, let me structure the question out and I'll ask you again. Just let me think about in a better way to explain it.
sure, I'm gonna answer questions for like the next 10 minutes.
Sure.
You've got some time.
Thank you.
Anybody else got a question in the meantime?
Not trade news is slippage, bro.
Yeah, I mean, when you trade news, you're gonna come into slippage. You're gonna come into higher commissions, higher swaps. Higher commissions, higher spreads.
Not worth it.
Yeah.
Yeah, Raul, I'm still low key confused on how you enter on the indices.
I mean, it's the same exact thing. I look for my entry signals based off of a support or resistance level, and I take the trend into consideration. That's literally it.
More so like the aggressive, like literally pressing buy or sell on the aggressive, either like on the 15. You say you wait till the retest on the 15 and then.
Bro, it could be on the 15, it could be on the 5. It's different day by day. If I see there's a lot of noise on the 5-minute time frame, I'll trade it on the 15-minute time frame. If I tell you that, hey, we're looking to sell on a candlestick formation that looks like this, right? This is going to be my sell signal, right? Essentially, you look for this at this area, and you only look to take that trade on these areas with the trend in confluence of that sell signal. Just this isn't going to look the same every single day. Sometimes this may be bigger, sometimes this may be bigger, sometimes this may be smaller, sometimes this may be smaller. But the patterns are literally exactly the same.
Okay, got you. Yeah, you cleared it up right there. Appreciate it, bro.
Yeah, I mean, like, if I'm looking to sell, it's typically because price action is going bearish, and I'm just waiting for a pullback to a resistance range, and then I look for this pattern.
Got you.
Vice versa if I'm looking to buy.
Yo, Raul, do you know when you said you're revamping your course, are you like deleting the previous videos or are you just adding on top of it?
I'm gonna replace some of the videos, but the majority of the time, I'm gonna add typically newer videos.
All right. Thanks, bro.
Yeah,
Hey, Raul.
yeah.
Bro, is there any way you could please go over US 30 one more time, bro? I came in late, though.
What's up?
Is there any way you could go over US 30 one time, bro? I came in here super late, bro.
Basically, what I said was that this is an area you could look for price to pull back to actually sell, or wait for a break and retest of the lows over here to actually look to continue to sell.
All right, cool.
Sells.
All right, thanks.
Bro, would you do the same for gold, please? Just a quick overview.
Basically sells this area here down into this area most likely. I'd wait for a retest of this area, or anything above this area would be buys up into this area.
Thanks.
Yeah. I mean, I'm going to upload the webinar right now. So right after the webinar, you want to see like the whole more in detail breakdown. You'll see it in like 10, 15.
Oh,
Yeah.
do you like to use zones for higher time frame levels? Because when I mark up zones on higher time frames, price ends up in the middle of the zone, and then I don't know where is the right location to enter, or even know when price is fully rejecting the level.
It's all going to be a general zone anyways. Doesn't matter if you put a horizontal line. Doesn't matter if you put a rectangle. Remember, you as a trader, you're placing that rectangle or horizontal line. That's something that's subjective to you.
Right.
That's not what the market's actually going to do. It's just to give you a general idea of where you want to actually see price reject and or break.
So I have a follow-up question for that. When you are trading zones, where do you prefer the location of your entry signal? Do you prefer it near the edge of the zone, just outside of the zone, or can it be anywhere inside of the zone?
I mean, I don't really use like zones in specific. I like to use horizontal lines just simply because I'm kind of looking for a more exact price point to get the most accurate entries I possibly can, although I know in my head it's a general zone.
Okay.
I'd like to like have it marked off for trade is ultimately up to you.
Okay. Thank you.
Yeah.
I have a question.
Yeah.
How do you set up your screen? Like, do you view just this one large time frame, or do you have like the 5 and 15 split where you're seeing a couple things, or what does that look like?
I have my MetaTrader 4 or MetaTrader 5 on my execution time frames being the 5 or the 15, and then I have my trading view being like an hour or 30-minute time frame.
Okay.
Yeah.
Cool.
Yeah.
How about the Call of Duty screen? You got the other screen.
That's after. That's when I'm done. Yeah. Any more questions?
No, just a comment, bro. I like how you posted on your Instagram that you started the webinar, because sometimes I don't get a notification that you posted the web link. So I don't know if you're gonna do that every time, but that was very helpful to pop in right here.
Yeah, I mean, I always post every time I'm doing a webinar.
Fire. That's
Yeah,
fire.
today's a little bit short because I got something to do for Leveled Up, so I'm in a little bit of a rush. So my apologies if I'm not taking like a lot of my time to break down the charts or give you guys a better detailed explanation or a question, because I'm on a pretty good time crunch now. If I didn't do the webinar when I started this webinar, I wouldn't be able to do a webinar today.
Yo, Raul,
Yeah.
you know how you say on these indices, you know how you say if the 5 minute looks too choppy, you go up to the 15 minute?
Yeah.
What would you call the 5 minute choppy? Like, what would that look like?
Consolidation, a lot of wicks, a lot of candlesticks, basically not giving me clear direction.
All right. Thank you.
Yeah. Just once you start being confused, bump the time frame up a little bit.
All right. Thank you.
Oh, when are you gonna drop that new YouTube video?
Which one?
The one with the paintballing, or did you already?
Yeah. I think I'm gonna drop it this week. Yeah, I think I'm gonna drop it this week.
Yeah.
How's the neck feeling, man?
My bad. Say it again,
How was the neck feeling?
bro. I
My
promise.
bad, bro.
No, you're good, bro. When I got shot right here at point blank range, it hurt for like a second. I didn't feel it for the rest of the day. They didn't bruise me.
All right, cool.
Yeah.
You guys play with frozen paintballs or what?
Nah, we actually played with professional paintball, so they didn't hurt. Except Samuel, let me tell you, he tried me on a 1v1 and got straight smoked.
Nah. That's not it. For me, like, I
Yo,
slipped.
don't even cap, bro. You got caught in 4K
Yo, when that video coming out?
this week. I think I'm gonna combine that video with a risk management video I'm gonna do for FTMO.
Bet.
Hey, Raul.
Yeah.
How long do you think it took you to start thinking in probabilities without like forcing yourself to?
Like 2 years in.
Okay.
The thing is, you have to force yourself to. Like, you have to adopt the mindset, and you got to remind yourself, you got to talk every day in probabilities and start removing words from your vocabulary like will, the market may do this. You have to like start adopting that, kind of like an I don't know type of ideology or a mindset, but you just have to think in probabilities. Like whatever you do, you have to understand there's a percentage you can win, there's a percentage you could lose.
Like a 50-50, right?
Kind of like a 50-50, but I wouldn't say a 50-50 just simply because, again, like you use all of this technical data that you gather together to increase the probability of your position.
Sweet. Thank you.
Yeah.
You had mentioned before that like you would, if you come to because you sound you got a lot going on, all these businesses you're running, all this stuff. So how you keep a clear mind while you're trading, to me, is like crazy. So if you come to the market and you're not 100% there, what you usually do at that moment?
If I'm not 100% there, then bro, I don't trade at all because I know I'm just gonna end up taking a loss.
What would you actually do? You just get up and just do something else and just go for a drive or walk?
Sleep, or I get up and I work on whatever else I got to get done.
Just do something else.
Yeah, because I find myself burning out very easily when I'm too focused on everything else that I got going on and not focusing enough on my trading. Like I find myself that like if I'm like 100% on lock with my trading and like 200% on lock with my other businesses, then I burn out in one aspect. If it's not on this aspect, it's over here. So I'm trying to find like a nice balance because trading is very mentally draining.
So you're not the type to like meditate or anything like that?
Nah, bro. I mean, a lot of people say you should, but like, I'm not gonna lie to you guys. Say, yo, I meditate, and do this, and I do weird rituals to get to where I'm at. I don't do that shit, bro.
And like candles and all zen out.
Yeah.
Starts right now in 4 minutes.
But supposedly meditate is like you don't have to like close your eyes and none of that shit. Like you need to just be focused about something. So that's what I heard.
Yeah, meditation for me, like it would just be like some push-ups. I go to the gym or something. Like
yeah.
I mean, I guess. I mean, maybe like for me, if that's the case for me, it'd probably just going out on a cruise in one of my cars.
Type shit. You know what I'm saying? Shit like that.
Yeah, but nah, bro. Like, because when I think about like meditation, I'm thinking about like you're sitting on the floor, crisscross applesauce with your hands like this. You know what I mean?
You dressing all white and shit.
Yeah, bro. When I think about meditation, something in the background. That's what
I'm not knocking people who actually do that, but like that wouldn't be me, though, to be honest.
Well, if you do it, I mean, God bless. Like,
Yo, wait. When you went to the Hard Rock that night, like, what y'all be playing there?
I play blackjack. My bad.
Yo, Ro, I got a question for you.
Oscar, guys.
Yo, Ro.
Yeah.
Yo, when you not, let's say like when you not, say like you already traded, and when you leave the house or something, do you like kind of like still watch the markets a little bit, or you don't even?
No, bro. That's a bad habit to do. I'll come back later on the day and see like, let's see what else happened.
We've been trading way too long to be still looking at the markets, bro. We put in way too.
Bro, I've been
Bro,
trading the
I
last,
find myself looking at the markets too much when I'm like leave the house, and then I'll be like, oh man, it could be a good.
when I'm done trading, I'm done trading. I've been trading for the last 6 years. It's kind of like it's so routine. I come onto the markets, take a dub or take an L, and I go on with my day. Like it's almost like it's a 9 to 5 process. Literally, like
That's how it has to be.
starts and I leave the house. I don't even want to think about it. So I come back home and I'm like, okay, let's see what happened.
Clock in.
Bro, I think I'm gonna have to try to do that because I still look at the charts when I
You gotta
leave.
separate your work life from your personal life.
Like when I go to the gym, I'll be watching the charts.
Nah, bro. First of all, you gotta lock in on the gym. I don't know what you're doing watching the charts.
Supposed to be focused on their workout, man.
Yeah, bro.
Yeah. Hey, I used to go to the gym, right? And like I'll be in drawdown. I'll be like, fuck man, I'm in drawdown. I'm gonna get like 10 more sets.
You start working out even harder.
Yeah.
When I'm in the intense trade, I just do cardio. Like sometimes I place my trade and like manage it from the gym.
Sometimes you got to sweat those losses out, bro.
If I were you guys, I wouldn't even touch TradingView or nothing until you're at your desk.
Bro, that's one of the biggest things, bro. I promise too, where it's like you clock in, you clock out, bro. You get in there, you get a trade. You don't get a trade, you keep it pushing.
Yeah,
So
bro.
what if you trade?
The goal is to have like a 20, 30-minute work day and move on with your day. You know what I mean? Because if you're constantly watching the charts, then your sole purpose of your existence is for the charts when it's supposed to be vice versa.
Would say that even for beginners?
So what do you
Yeah, bro. Like when you're not home, bro, you don't gotta be looking at the charts because you're not doing nothing. You know, if you're not in a trading session, why are you looking at the charts? It doesn't necessarily matter. The only reason I'm on the charts right now is for the webinar. If not, I wouldn't even open my computer until the morning.
So what about if you're in a trade though? If you're in a
trade, then I recommend that you just stick to your trade and, you know, try to be as focused as possible. I mean, if you're day trading and you're looking for like a huge move, then I mean, like, look at it every single hour, you know what I mean? But not be glued to it. Like 5 minutes pass by, let me see what happened. Like, you know? But in my situation and how I trade, like, bro, my work day is typically 3 hours in terms of trading.
Which is dope that you're saying this, because that's a good question from that other trader. Because when I watch like a lot of podcasts with other traders and stuff too, because they got good mindset stuff in there just to see their story, their journey and stuff. And a lot of them talk about when they first starting out, staying on the charts, chart work and all this stuff. So it's like, it's dope that you explain it the way you are right now.
Yeah, bro. I mean, like, again, like your sole existence and why you started trading was so you can get freedom. But now you're going to be a slave to the charts? No, bro. That's not why we started trading.
Wait, I got another question. Cause you see how you said like how you be done like usually after like 3 hours, right? So like what would the mindset be for like somebody that's like swinging trades? Like how would you like manage your trade if you was like swinging stuff?
I would look at what your main time frame and bias is for the position and just look at it every single hour. Because when you're swinging a position, you're setting a stop loss, you're setting a take profit, and typically you're not getting out in between. I mean, you'll manage your position. That's why you go back and you look at it like every single hour. You know what I mean? But I wouldn't be glued to it either.
Yeah.
Because, I mean, you looking at the charts is ultimately going to do what? If you're a break even, you're a break even. There's nothing you could do. It's either wait till you're in profit or wait till your stop loss gets hit. You looking at the charts is not going to make the market go up or down. But again, you have to manage your position. You just have to understand when you're going to move your stop loss to break even. And when you see price give you that opportunity, do it and then move on again.
Let me know your opinion on this though, Raul. So when it's time to actually spend time on the charts, as if you're back testing or if you're reviewing your charts, your trades before.
Yeah, if you're actually doing something, it's not to just, oh, you know, let me check up on GJ, you know, like if it was an actual person, you know what I mean?
Yeah. What you on, GJ? What you trying to do?
Yeah. GJ, you trying to go out tonight? Like,
yeah, like, you know what I'm saying?
Yeah.
Bring up the Raris.
Like, bro, like if you're at an event or you're at dinner with your girl or you're with the boys and you're doing whatever, bro, there's no reason for you to be on the charts. Like, fuck you doing anyways. You're not going to be locked in for you to make money.
Right. It doesn't matter what the shit is doing unless you're on there trading. Like it literally don't matter until you're at the screen. You feel me?
If you trade New York session, then it shouldn't matter what it does during the London, during the Asian session. What matters is, okay, let's see what happened. You do your pre-market analysis, and then you actively trade. That's why you set like an hour before so you could review what's been going on for the last few hours. And that's so you actively know what's been going on for the last few hours, you know?
And then you got your post-market analysis, and then boom, you're off again.
Exactly.
Constantly being on the charts is gonna fuck with your patience. Then when it comes time to your actual session, you're gonna be burnt out.
And then it's just gonna fuck with you in general. Like, oh, this looks like a good setup. Should I take?
Yeah.
You know, damn well you're outside of your trading time. Like, what the fuck you doing looking at the markets at 6 p.m. You know what I mean?
Facts, bro. I took some crazy losses doing that shit.
Yeah, even if you look at the markets like during your session, if you look at them too long, you be like, damn, it's like a good move potentially.
It's like you start hallucinating, bro.